Good afternoon, Mr. Ndani.
Good afternoon, my friend.
You're welcome to Graphic.
Thank you very much.
As we were told earlier, as part of our 70th anniversary, we are inviting some of our customers, prominent or from every status, to have a feel of what we do here as guest editors. Yesterday we heard you talk about giving companies up to 1.9 billion cedis in loan repayment holidays.
Yes.
Impacting the businesses. Have you been able to monitor to see how these advances to them are helping them?
Yes, so what we've quickly realized as an association of bankers, 23 commercial banks and other financial institutions working with the Bank of Ghana was to say, look, we will be at the center of this. So we're the very first of all, to even before lockdown, to be able to redistribute our work in such a way that we could continue to render essential services with our staff working in safe locations, and also ensuring that customers could come into the branches and do business in safe locations. So we took all those hygiene protocols, social distancing protocols, even before face masks became compulsory. So all those measures were taken. But then as an industry, we all sat together and said, look, it's a systemic risk. It's a massive systemic risk, which means that risk impacts everybody. So how do we deal it? So we, as CEOs of all the banks, sat down and put this scheme together. First of all, let's identify all the immediately impacted industries and firms and rescue them, which we did through the loan restructuring. And I think at the last count, first week of May, when we looked at the numbers, we had rescheduled principal repayments of about 1.6 billion Ghana cedis. Within the same period, one would have thought that would COVID and the risk and uncertainty created, whatever facilities we granted to our customers, we would have taken it away. We didn't. We continued to disburse new facilities, also in excess of another billion. And even in the middle of the COVID, as I said, there are some we needed to give new money to in order to keep going. And we again advanced, money. If I put all of that together, we are probably talking 3.6 billion that we have done in terms of rescheduling existing loans, allowing committed facilities which we had given before COVID to continue to be utilized, and even in the middle of COVID, looking and seeing where we could still safely intervene with the client to keep going. We provided that. Not to mention the fact that we have actually, in some instances, had to write off interest, for those who just didn't have the capacity to pay. The banks have also written off interest. And also, thankfully, because of the policy direction, monetary policy direction, interest rates kind of trended down. And before COVID and now, if you look at your interest rate structure, borrowing costs would have come down between 3 percentage points to 4 percentage points, totally coming down from what we call the policy rate impact on the Ghana reference rate, and then also margin compression from the banks in order to make it tolerable. So a lot of initiatives have already been taking place, and we came to the realization that it's not any one bank acting individually, but all of us acting collectively together and ensuring that we have a safe banking community that can survive COVID with minimum damage.
Mr. Ndani, even in good times,
yes,
we saw companies that heavily defaulted
yes,
on their loans.
Yes.
Now we have a challenge, yes, that everybody knows about.
Yes.
How do you think that can impact on non-performing loans at the end of the year?
I think there is a risk that you are in denial of, and the risk you embrace and manage. Most of the problems in the past where we had NPLs that became difficult were problems that we were in denial of. Our clients were in denial of the problems that they faced, and probably ourselves as bankers were in denial. And Ghana government is a very big entity as well, and maybe our clients in this particular case, Ghana, was also in denial. So those the factors that created that NPL in the past that we all had were probably risks that banks thought they were managing, which they were not managing. Clients thought they understood, which they didn't understand. That's very different from COVID. the risk coming out of COVID is something everybody has acknowledged. The politicians have acknowledged it, economic actors have acknowledged it, individuals have acknowledged it. So we will manage it. To your point, will some companies collapse? Sure, they will. But we know it. So therefore, you're not going to take the pain over a long period of time. You will cut the pain quickly. Those that will survive, you'll give them a long treatment. So I expect COVID will have its casualties, but it's not a risk that we are in denial of. Our clients are not in denial of it. We as bankers are not in denial. Government is not in denial. So we can manage that COVID risk, even though it's a much more severe risk. We can manage it better than the risk that created big NPLs. The problem then was we were in denial of those risk factors.
That sounds like a very good assurance to these companies.
Well, when you say assurance is not to say that there isn't going to be significant adverse impact on their businesses. All I'm saying is that we are not in denial of that. We are aware, for example, hotels. It's going to take a long time for hotels to come back to the occupancy levels that we saw. Airline travel, it's going to take a long time for people to fill aircraft. And even the jury is still out there whether the passenger carriage population per plane will be the same, will be different, and what will be the profitability levels. So manufacturing and imports. Most countries will probably want to see domestic production, create some internal resilience in terms of what they can be dependent on pharmaceuticals and all of that. So there'll be significant shifts in the way countries organize themselves, and also how companies and individuals within those countries will respond to the new structure of the economy that would emerge post-COVID. So I'm only saying that it's risk that we embrace, acknowledge, and will manage.
Okay. But do you foresee at the end of the year it impacting on your bottom line?
Oh yes, I mean it should impact on us. Look, banks reflect the GDP. Banks reflect the sum total of economic activity in a country in which they operate, and also globally. Now, the global economy is contracting. Even the most developed economies in America, Europe, China is contracting. This certainly will have an impact on Africa, will have an impact. The Ghanaian economy, GDP was supposed to grow at a healthy 6.8% before COVID. Now we will struggle to grow even at 2%. So, banks we are a mirror. We are the mirror that reflects all of that. So if this is going to happen, it will be foolhardy to say that it will not impact us. What we can say is that we will do everything to protect capital, which is the shareholders' funds and the ability to retain our licenses. We will also do everything to protect what we call liquidity, which is what is really the lifeblood of the economy. We will not jump and do anything that will endanger capital, that will endanger liquidity, because every section of the economy needs liquidity to keep going. So we'll conserve liquidity and use it judiciously. We will protect capital. We will protect capital. So hopefully, you are not going to hear after COVID that some banks have run out of capital. No, that won't happen. We pray that should not happen.
So, before I come to the measures, some of the measures taken by Bank of Ghana to ensure some more liquidity in the system. Let me ask, what advice can you give to these companies that are benefiting from the services that you are offering, so that at the end of the day, they keep afloat?
For me, the number one advice is that they must truly and genuinely be business people. And that, to be a businessman, there is an identified product and or service or a problem that you have set out to solve profitably. And that must be your guiding principle, so that all the facilitation that government is coming through with whatever COVID stimulus package, all the rescheduling and the new facilities we are giving, people don't see it as another opportunity to suck money out of their businesses to enrich themselves. That's been the problem in Ghana, and that we always try to game the system, to exploit situations with no intention of saving your business. And I think that if we can all just remain businesses, and all the facilitation that we have put out there to SMEs, to corporates, that they genuinely want to plow those resources to safeguard their businesses, that will be good for Ghana, that will be good for themselves, that will be good for all of us.
So like I said, the central bank stepped in. It announced a few things, reducing the policy rate by about 150 basis points. We saw primary reserves come down from 10 to 8%. We've seen some announcement of budget support for government. These are all meant to ensure some liquidity within the system. Do you think these measures are enough for you as banks to support the businesses that we know?
Yes, and the explanation of that is you have to go back to see how have the measures done or helped us to improve exactly what I was telling you about capital, liquidity, and ability to support. So we have what we call the Capital Requirements Directive, which were, risk parameters that the Bank of Ghana announced to dictate how we deploy our capital. So they brought those parameters down. So therefore, capital adequacy of the industry has seen a significant jump. We've moved from an average of around 13%, probably now to around 19% as a result of the relaxation of the capital management parameters. So, and with that kind of adequacy, then you are now much more stable, in a more solid position to use your capital to do interesting things. Yeah, that's number one. So the measures have impacted the overall capital adequacy levels of banks in Ghana. Number two is also the liquidity. So we've seen the cash primary reserve drop from 10% to 8%, freed up 2% of total deposits. That's a lot of money. Now, again, and they said to us, don't bring that money and buy government paper. Make sure that you put the money in the real sector. So that's coming back. And if you look at the overall level of liquidity in the banking sector, it's much higher. Otherwise, if they did not do that, everybody is conserving cash. Whether it's companies or individuals, they are conserving cash. People are pulling monies out of the banks. Now, if we have sufficient liquidity, we can support that activity. So again, if you look at the overall supply of liquidity in the market, it's significant. So if you use these as a measure of the effectiveness of the monetary policy measures that Bank of Ghana has introduced, I will say that it's been very impactful, very positively impactful, giving us capital leverage, giving us liquidity leverage, and allowing us to pay more attention to the private sector.
We enter the banks today, we see some changes. In the newspapers, on radio, we hear of some new things that you want customers to do, to keep banking going. After the pandemic, are we likely to see things change or remain the same?
The pandemic has just catapulted the world into a new way of life or new ways of work. And I keep saying the pandemic is clarifying the definition of work. Is work a set of things to be done or a place to go to? So that's it. Work has to be redefined properly. Is it a set of things to be done or a place to go to? At the moment, before the COVID, everybody thinks that to work in graphic, I have to come look physically to a location of graphic. No, graphic has work, things to do, which you have been assigned. You can get it done anywhere and feed it back to graphic. So sadly, that's what it is sold as. So we also were transitioning already before COVID to make banking more convenient for our clients through what we call digital channels. So in fact, we found out that you didn't need to come to the banking hall to do nearly 80% of the things that we traditionally will give you in the banking hall. You can deposit cash at remote ATMs with cash receptors. You can transfer money on your, any of your mobile devices connected to the bank, pay anybody, both. So it's giving us opportunity to transition to all these convenient, customer-centric channels, digital channels. Your smartphone is become your bank. So it's banking you want to do, not banks, not the physical branch. So we think that, and our employees, for example, before even lockdown, 60% of our employees were already working at home and delivering exactly what they were doing. In fact, we even feel that we're taking more of their time than when they were reporting to work, because you wake up in the morning, you switch on your emails, the emails are coming at 6 a.m., you are working already. Whilst you would have had to report to work at 8 o'clock, settle down, turn on your system. We've already gained 2 hours without the travel and not putting you through the risk of COVID. So ways of working would be totally different from after COVID. But I can only say that the quality of the service, the convenience of the service will be much, much better, after COVID.